The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you on this Wednesday, hump day. What time we got? 3:07, 3:08 Eastern, a little past noon on the West Coast. A little more than 50 minutes left to go in Wednesday session. Another constructive day for the market. We'll get to that in just one moment. First of all, the phone number to call if you want to talk to me about this market, 877-927-6648. You can catch my show every day on TFNN from 3 to 4 Eastern. Pick it up as a podcast over on iTunes if you can't listen live, and don't forget about your smartphone. You can listen to all TFNN programming on your smartphone. Just plug those earbuds in, open your smartphone browser, type in tfnn.mobi. Click Listen Live. Very easy to do. And if you want to look at charts live right along with me, you can use Tiger TV to do that. You can listen at tfnn.com. The show is carried live on Channel 1. It is archived on Channel 13. And Tiger TV is also viewable on your handheld device as well. Same deal. Open your smartphone browser, but type in tfnn.com. And then over on the top right side of the page, you'll see a box there with some mobile devices, and just click that. It'll recognize what device you have and start streaming Tiger TV right on your cell phone. So pretty cool. All right, NASDAQ composite. Let's see what the tech index is up to here. Trading in the middle half of its range here, off its highs, trading up 10 points, 0.3% to 3102. Kind of a nice looking chart here for the NASDAQ composite. At some point, the NASDAQ probably is going to fill this gap here, but I got to tell you, this price action over the past 4 or 5 days tells me that we may just take out this high that was set here last week, one day after the NASDAQ gapped up. I believe that was on January 2nd. So NASDAQ composite looking stealth here. Let's take a look at the S&P 500. We'll see it is holding gains, but it is well off its high now, actually trading near its session low. S&P hit a high of 1464 today, last trading at 1458, up just a little more than 1 point. So buying demand kind of drying up here in the S&P 500. Taking a look at volume today, still not, outside of the big day of accumulation we saw in the market last week. Volume has really quieted down, so we've seen sort of this downward drafting market, but really not much in the way of volume. NASDAQ volume today tracking 5 to 10% higher than what we saw yesterday, which was maybe just right around average, 1.71 billion shares. Volume on the New York Stock Exchange tracking about 3 to 5% higher than yesterday, which was 687 million. So we'll see how we end into the close here. Checking in finally on the Dow Jones Industrial Average is up 34.5 points to 13,363. We haven't looked at the Russell 2000 in a while, so before you get too bearish on this market, understand that last week you did get a picture perfect technical breakout from a cup with handle pattern by the Russell 2000 last week, the small cap index. So a lot of action out there in small cap names, and small cap stocks are an interesting area of the market because when you look at small caps alongside mid caps and large caps, you tend to see some very nice earnings growth in the small cap sector. Some of these, $500 million, $1 billion, $2 billion companies that, who knows, several years down the line are going to double, triple, quadruple in size. So I've always been drawn to the small cap market just because that's where you tend to find nice earnings growth. And as fourth quarter earnings season approaches, you're going to see a lot of lukewarm results from some of your large cap blue chip names out there that have been growing in the low to mid single digits seemingly forever. But there are going to be plenty of positive stories in the small cap space. So these are the types of stocks that I'd like to target for the Ultimate Growth Stocks model portfolio. But the model portfolio right now has got small, mid, and large cap names in there. So, folks, don't forget about my webinar coming up Thursday, January 17th at 6:30 p.m. Eastern. Speaking of Ultimate Growth Stocks, that is my weekly newsletter at tfnn.com, and you can attend this webinar free if you're a subscriber to my newsletter, and so that's a good deal. And if you've been thinking about getting 30 days free of Ultimate Growth Stocks, now is a good time to do it, because if you've got a 30-day trial at the time of the webinar, access is free as well. So be sure to visit me Thursday, January 17th at 6:30 p.m. Eastern. The webinar is going to be titled 2013, A Year of New Leadership. Also coming up at TFNN, the Great Panther Silver Summer Silver Giveaway. That's going to be going on between January 28th and February 1st. It ends at the end of the day, February 1st. TFNN and Great Panther Silver are giving away 47 pieces of silver. And basically, there's going to be half-ounce pieces of silver, 1 ounce pieces of silver. We're going to be giving away silver every hour from 9 a.m. to 6 p.m. Eastern. And that's going to be going on January 28th, 29th, 30th. Don't know if there are 31 days in February, but January 28th through February 1st. So be sure to get more details on the homepage of tfnn.com. Sign up is free. All right, yield on the 10-year note, 1.85%. Let's take a look at the chart of the yield of the 10-year note. You can see down bond yields up last week sharply, down for 3 straight days now, but not a precipitous decline. So yield on the 10-year note at 1.85%, and the 30-year, which would be TYX here in stockcharts.com, TYX, also lower for the third day, yield on the 30-year bond at 3.05%. Heard Mike Crofton on CNBC yesterday. He's the president CEO at Philadelphia Trust Company. He told the network yesterday he thinks the yield on the 10-year note could hit 3% over the next 12 to 18 months. He's probably not far off there. I would tend to agree with that. Other news today, President Obama is going to nominate Jacob Hugh. He's the current White House Chief of Staff. He will nominate Mr. Hugh to replace Tim Geithner as Treasury Secretary. Geithner is going to be on his way out very shortly, probably just after the inauguration of President Obama for his second term. Taking a look at February gold today, down $6.70, 0.4%, settles at $1,655.50 an ounce. I have not been quiet about my feelings about gold. The GLD still looks technically very troubled here. Resistance at the 200-day moving average here. It's going to be a tough road back for gold, and it looks probably like a better short here than a long at this point. But we'll see what the future holds. The GLD today down 15 cents to 160.41. It's been below its 200-day moving average for a few days now. Fell below it back in December. Tried to rally back above it. That rally was short-lived, and it is below the 200-day line again. So GLD looking quite tired here. The U.S. dollar index at 80.54, up about 1/4%. Let's check in on the U.S. dollar index here. And we'll see it closed Tuesday at 80.35. So significant resistance right now for the U.S. dollar index would be its 200-day moving average, 80.83. So again, right now the U.S. dollar index at 80.54. It's about 30 ticks below a significant resistance level. So hearing more and more dollar bulls out there, but we'll see. Technically, the U.S. dollar index still looks weak to me. February crude oil down 5 cents, settles at 93.10 a barrel. We did get some inventory data today from the EIA, Energy Information Administration. That data showed that crude stocks increased by 1.3 million barrels, mostly in line. Gasoline supplies jumped by 7.4 million barrels. That was much more than expected. Distillate inventories, which include heating oil, rose 6.8 million barrels. That was also much more than expected. So not much movement in crude oil today on that data, just down 5 cents. Again, settles at 93.10 a barrel. Let's take a look at shares of Facebook here. Facebook is a current holding in the Ultimate Growth Stocks model portfolio. It's been a nice little rally for shares of Facebook in recent days. Late Tuesday, the company did send out media invitations for a January 15th event at the company's headquarters in Menlo Park, California. Speculation that there could be a major product announcement. So that has resulted in improved sentiment in Facebook. I do think that fund managers are starting to come around to the potential growth story at Facebook. There are still questions about how specifically this company is going to monetize their big user base. But you remember when the company reported third quarter earnings last time around, there was very nice growth in mobile, unexpected growth in mobile. So it was an earnings report in the third quarter that turned a lot of heads. Revenues were up 32% to $1.26 billion. So technically, Facebook has come back to life here, and I think I tweeted not that long ago, I think this is a stock where mutual fund ownership could easily double over the next 12 to 24 months. So Facebook continues to act pretty well here, and they again took a page out of Apple's playbook by announcing this, sending out media invitations, possible product announcement on January 15th. Speaking of Apple, more headlines around Apple today. Stock is still can't get out of its own ways, sitting underneath significant resistance at $549. Apple right now trading at $520.19, down 1% on the day. Apparently, Apple is working on a lower-end iPhone. A lot of other phones out there, lower-cost phones that are running on Google's Android operating system that are gaining market share. And, Apple's market share gains have actually are not looking that great right now. In the third quarter of 2012, Apple's share of worldwide smartphone shipments was 14.6%, down from a peak of 23% in the first quarter of 2012. That's according to data from IDC. Meanwhile, Samsung's share rose from 8.8% to 31.3% from the third quarter of 2010 to the third quarter of 2012. So, Apple just really faces a lot of challenges ahead. Haven't been not a secret where I am on Apple. This is not a stock that I'm probably going to own in 2013. It is likely going to be a very, very long road back for this company. But, perhaps a lower-end iPhone is probably the best idea I've heard yet from the company. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone. For the Ultimate Growth Stocks model portfolio, I am currently long 7 names, put out buy recommendations on 7 growth names. Started initiating new positions back in November, have added some new names recently, but being very cautious right now about chasing, because when I look through my growth screens, I'm really, I have room, to own maybe a couple more stocks, 2 or 3 more stocks, but I'm really seeing a lot of extended stocks out there, and my feeling right now is that the big leaders have already come out. So when I'm seeing stocks breaking out today or yesterday, I'm a little cautious of the fact that they could be laggard breakouts. In some instances, the volume isn't all that impressive. So I think at this point, a lot of the big leaders have already come out. One exception possibly would be Amazon. Amazon had a beautiful breakout. And it was earlier this week, actually, on Monday, when it cleared a swing point of 263 in heavy volume. But you kind of see how this breakout's kind of having a hard time getting going. And if new money was really coming in with vengeance in this market, normally breakouts aren't going to stall like this. You'll see legitimate follow through. Shares of Amazon were weighed down a little bit yesterday by data from Channel Advisor that showed that sales at Amazon.com's online marketplace decelerated a little bit in December. Not big news there, but it did affect the stock. But Amazon right now is still within buying range. It's not extended by any means. Again, big move for the stock on Monday. Powerful breakout in heavy volume. Swing point at 263. The stock is trading at 266.76 right now. So you're not talking about chasing a stock if you're buying Amazon right here. So overall, I'm just kind of being patient with what I have right now, and I ideally want to add to some positions. Maybe we'll be able to do that during the next low volume pullback for the market. 877-927-6648. Going to take our first call of the day. Head up to Stockton, California. Talk to Sam. Good day, Sam. How are you?
I'm fine, thank you, Ken. How you doing? It seems like you're doing pretty good now, health-wise.
Yeah, feeling much better. Thanks very much. Feeling pretty good.
That's great. The reason for my call was I wasn't going to call, but when you mentioned about that Treasury, 10-year Treasury, somebody predicted could go up to 2.5 to 3%, and I thought about an idea called like shorting 20-year Treasury, which is a long-term, and ticker symbol I have is a TBF, which is not a leverage as compared to TBT. Now, what do you think about this one going long?
Okay, well, I'd have to look at this. This is a TBF, Tom Boy Frank, the ProShares short 20-year. So you'd basically be shorting, bearish bonds, yields going higher. This, it's probably not a bad play. I am a believer in rising bond yields in 2013. I think that with the economy set to probably improve a little better than what some are thinking, I am a believer in what I mentioned earlier in the show, that bond yields should continue to head higher. So I think this is a pretty good play right now. However, just looking at the technical picture of TBF, the fact that it is it's technically not that weak right now. So I would wait for some more higher volume declines to come in here. You basically have the TBF in an uptrend. So I'd be cautious of taking a short position right now. However, if you start to see higher volume declines, you see a break below, I would say, 29, maybe 29 and a quarter. It's at 29.78 thereabouts right now. So I would wait for this to break down a little more before considering going short. That would be my initial take on the TBF.
Oh, okay. And I was looking for this for like a couple of years, kind of long-term hold. Now, let me ask you real quick. I don't know how much you know about TBT, which is a 2 times the leverage. I'm a little bit concerned about that because the way the leverage, it's so complicated, and it has if the Treasury goes the other way, it'll have a more, in other words, this is more safely approach for the next couple of years.
Well, it gives you twice the inverse performance of the index that it tracks. I mean, the chart here is virtually identical to the TBF. Yeah, it's exactly the same type of technical setup. Both funds recently climbed above the 200-day moving average. They've been pulling back in light volume. So, to me, again, the technical picture actually looks kind of, I like to short things that are acting weak, not strong, and both the TBT and the TBF right now are not weak yet technically. When they get weak technically, more higher volume declines. That's your opportunity to go short, I think.
Thanks for your 2 cents, Ken. I appreciate it.
Okay, Sam, always appreciate the call. Thank you. Have a good one.
Good.
All right, folks, headed into break number 2. Ken Shreve with you on Breakout Investing. We'll be right back.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. Fourth quarter earnings season is fast approaching. Last night we heard from aluminum giant Alcoa, ticker AA. They made 6 cents a share. That was in line with expectations, reversing a year-ago loss of 3 cents. Sales were down 2% to $5.9 billion, but that was $300 million better than the consensus estimate of $5.6 billion. So good top-line beat by Alcoa. After 4.5% global aluminum demand growth in 2012, Alcoa said it expects demand growth to accelerate to 7% in 2013. All seemingly pretty good news from Alcoa, but very disappointing day for the stock today. Hits an intraday high of $9.33. Now trading at $9.10, flat on the day, trading near its session low after early strength. So disappointing price action in Alcoa. You can see on its daily chart here, it had been in rally mode ahead of the results, and frankly, the numbers weren't too bad, but buyers just not interested in owning Alcoa at this point. When it comes to fourth quarter earnings season overall, S&P 500 firms in aggregate are expected to produce earnings growth of 2.7% compared to excuse me, a year ago, with sales up 1.9%. So that on the surface, that's pretty small growth, but I remember earnings season there are always tremendous stories. There are always great earnings reports to ponder, to digest. They're going to be companies that soar on better than expected earnings and great outlooks. So it really kind of turns into a stock picker's market during earnings season. The media are going to tend to talk a lot about the irrelevant earnings reports out there. What I try to do with Ultimate Growth Stocks is to always keep you abreast of companies that are really delivering the outstanding results. So, and there will be plenty of good stories in fourth quarter earnings season. I can guarantee you that. Global Payments, at last check, was having a good day. A nice gap up for the stock. It's off its high, but still a solid 6.2% gain for Global Payments. Last trading around 48.91. This is a company that provides electronic payments, transaction processing services, ticker GPN on the New York Stock Exchange. Earnings were up 8% to 93 cents a share. Estimate was for 87 cents. Sales up 11% to 588.5 million. That was about 14 million above the consensus estimate. So good bottom line and top line growth at Global Payments. Sales at U.S. operations rose 16% to nearly 340 million. That's more than half of the company's total revenue. International sales rose 11%. So overall, a pretty good quarter from Global Payments. And, the numbers weren't bad at all from Constellation Brands. This is a spirits company. They have a portfolio of more than 100 wines, beers, and spirits. Kind of an ugly day for the stock, down 30 cents, 0.8% to 35.76 after hitting an intraday high of 37.51. Earnings were up 26% to 63 cents a share. That was about 8 cents better than the consensus estimate. Sales up 9% to 766.9 million. That was also better than expected. The company also raised its full-year earnings outlook from $2 to $2.10 to $2.10 to $2.20, so above its prior forecast and also above the consensus estimate of $2.07. But the market still not impressed. Big reversal for Constellation Brands, down 30 cents now to 35.76. Taking a look at some headlines today. Skullcandy. This is a company that makes headphones. Some takeover speculation here. I think it was Roth Capital that analysts there talking about the fact that valuation makes this a compelling takeover target. What do you say here? The stock's up 23 cents, 3.4% gain to $7.10, has really been obliterated. Skullcandy came public in July 2011 at $20 a share, now a $7 stock. So some takeover chatter here. We'll see how that plays out. And also Dish Network having a good day. They are offered to buy Clearwire, CLWR, for $3.30 a share. That's above a $2.97 a share deal from Sprint Nextel. Clearwater already entered into a definitive agreement with Sprint Nextel, but apparently they're going to, give they're going to listen to what Dish has to say. So shares of Dish Network, satellite TV provider, up 2.5% today to 36.88. Check in on shares of Herbalife. What a move for this stock. Not that long ago, there was the hedge fund Bill Ackman from Pershing Square said that he was short Herbalife. Stock got decimated here back in December. And 300-page short case for Herbalife by Bill Ackman. Today it's Dan Loeb from Third Point, another hedge fund, and actually a friend of Dan Ackman. He said that the fund has bought a more than 8% stake in Herbalife, about 8.9 million shares over the past 10 sessions. You can see Herbalife is up more than 50%, hit a low of around $25 a share, back up to $40.16, up 4.7% on the day today. So looks like Dan Loeb long and Bill Ackman short. Herbalife going to be jousting here for a little while. Herbalife is approaching pretty key resistance level here. It's 50-day moving average at 42.91. So Herbalife last $40.16. Big move today for Interactive Intelligence. That's IN. This is a provider of business communication software. They raised their revenue guidance for the fourth quarter. Small company here. They raised their sales guidance to a range of 70 to 72 million. The estimate was for 68 million. Total orders received in the fourth quarter grew 119% from a year ago. Cloud-based orders up 312%. So Interactive Intelligence having a big day today. Bullish breakout for the stock, up 18.6% to 39.03. Goldman Sachs upgrades shares of MasterCard today. Interesting upgrade here to buy from neutral. MasterCard is just one of these stocks that's just extended. Longs have definitely been rewarded here for many years, has been a long-time strong performer. Interesting upgrade today considering the stock has made such a huge price move already. Goldman cited lessening concerns about MasterCard's exposure to Europe. It has much more exposure to Europe than Visa. But again, if you're buying MasterCard up here, you're chasing. This stock, to me, looks like it's ready to pull back a little bit. It may happen, it may not, but if it continues higher, it can, go up without me. If you look at a weekly chart of MasterCard, this is a stock that is also what looks to me like a late-stage base, and we talk about late-stage bases quite a bit on this show. All big runs eventually come to an end, and buying a stock when it's coming out of a late stage base or very extended after breaking out from a late stage base, you're just kind of playing with fire. So MasterCard, another big day for the stock, working on its second straight weekly price gain, but this one does not interest me here. Goldman Sachs out with an interesting list of dividend paying stocks that they expect to see earnings appreciation due to expected share buybacks. Kind of a headline-grabbing list that Goldman Sachs came out with today. Some stocks on the list that they think could do well in 2013 include Coca-Cola Enterprises. Technicals here look pretty strong. Recent breakout for the stock over 32.5. Pretty soft volume behind the breakout. Also on the list was Wyndham Worldwide, WYN. Another stock that actually had a nice breakout here over 53.50 thereabouts. Strong breakout for the stock last week, and another technically healthy stock here. Lowe's was on the list, LOW. So again, it's basically a list of stocks that pay a dividend that are expected to see an earnings benefit due to expected share buybacks. So interesting list put out today by Goldman Sachs. Bank of America. Let's check on Bank of America because the stock got a downgrade today from Credit Suisse, and it had been holding up pretty well there, but now it's down 5.2% to $11.35. This is another stock that was very, very extended after a recent breakout over $10 a share. So a Credit Suisse downgrade to neutral. Definitely weighing on shares. Big volume in the stock today. It has already traded about 271 million shares on the day, and Bank of America normally trades about 160 million. So definitely big sellers in the stock today. A lot of these financial stocks have been moving for a while. I agree with Ralph Ancampora when he says that the financial leadership is compelling in this market right now. Again, you just want to be careful not to chase performance. One name that still looks interesting here ahead of earnings this Friday is Wells Fargo. Now, it's in a good technical setup here. Everybody's waiting for big volume to come into the stock and a breakout over $35 a share, but you've got a reversal today. Wells Fargo hits a high of 35.15, now trading around 34.72, only up a penny on the day, and I believe Wells Fargo is going to be reporting earnings on Friday. So looks like weakness in financials late in the day here. Let's check in on the XLF. here is trading near its session low, down 5 cents now to 16.91. The XLF recently had a breakout over 16.70. So this is the breakout here. XLF gapped up when the NASDAQ gapped up last week. Big, strong day for the market. That was January 2nd, I believe. So the swing point here was 1670. Buying the XLF here, you're not chasing. You're going to want to put a stop in and just protect yourself from losses. But this is a good, solid technical breakout, and a stock, or an ETF, I should say, that is not extended yet. All right, let's check in on the markets here, because just looking at the financials here, let's see if we're off our highs. Not too bad. Dow is up 54 points, 0.4% to 13,382. NASDAQ still holding gains here, up 13.5 points to 3105. And the S&P 500 up 3 points, 0.2% to 1460. So, market at this point is not doing anything wrong. We looked at the index charts at the top of the program here. I think it's very, very compelling that indices are holding gains from last week. If we were in a volatile market, or we're in a market where there's still a lot of institutional selling going on, we wouldn't be holding gains like we are. So I think the price action in the major averages remains compelling. And I always let the performance of holdings in the Ultimate Growth Stocks model portfolio, I just keep an eye on them. If they're acting fine and pulling back in light volume after recent price strength, there's no reason to be too quick on the trigger here. So model portfolio holdings aren't doing anything wrong. Major averages aren't doing anything wrong. I'm kind of blocking out the negative talk out there about maybe a disappointing fourth quarter earnings season, or these debt ceiling talks, or high unemployment, all these things. The market itself is behaving just fine. Taking a look at some other movers here. Healthcare Services Group. Big move for the stock today, up 5.25% to 24.64. Breakout here over 24. At 24.64, this is still within buying range here. Good technical breakout for a company that provides housekeeping, laundry, maintenance, dietary services to long-term care facilities. Nice technical breakout for healthcare services over 24. And again, at 24.64, I don't think the train has fully left the station here. Healthcare Services Group normally trades about 325,000 shares a day. Volume has more than doubled today. So good burst of institutional buying in the stock today. Check in on shares of Michael Kors. I think this one has the potential to do well in 2013. Still working on a base here, approaching a resistance level just over 55, but as you can see, Kors working on 7 straight gains here. Not much in the way of accumulation. Its technical picture would strengthen with renewed signs of institutional buying here, but right now the stock up 38 cents to 53.38. Legitimate growth story going on at Kors that I think will continue in 2013. You also have SolarWinds. Now, whether or not this is a laggard breakout or not, it is breaking out today over a swing point just over 56. Last trading at 56.75, up 3.4% on the day. Again, a maker of network management software. It normally trades about 725,000 shares a day. Volume good, but not great. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. Let's head out to Franklin, Massachusetts. Talk to Brian. Wants to talk Under Armour. How you doing today, Brian?
Hey, Ken, I'm doing good. Happy New Year to you.
Thank you very much, sir. Right back at you.
Thanks for taking my call. I know the chart doesn't look good. I'm just wondering where it would be a buy, if it is a buy.
You know, this is a stock that's under distribution, okay, and I'm not sure why, because fundamentally Under Armour still looks pretty good. Question is, are fund managers going to come in and start buying this thing again? I would say, you know, it's a buy once it gets back over, you know, this 51, 52 level, because that's where significant resistance is in the chart here. I mean, its technical picture is so weak right now. It's getting close to that low of 46.11, which was set back in mid-December. You know, I suppose you could get a little bit of a bounce here, but again, if it rallies back, you get 2 or 3 points of profit. I would sell, but It's in a downtrend. It's in a downtrend for now. You know, I know kind of coming into this low of 46.11 back in mid-December, it came down on 4 million shares. It is today you've got 2.5 million, so it is testing that low in lighter volume. So you may have a trade here, but bottom line, this is stock under distribution. It's just in a downtrend and not looking good at all.
Yeah, because I have an 8-year-old son, and it seems like all the kids are wearing their sweatshirts and their sneakers, and like there's a disconnect between the stock and the product.
Yeah, no question about it. I mean, you look back, look out going forward, and this is a company that's probably still going to be able to grow annual earnings by 20-25%, but it's just being unwinded by the big guys out there, and you gotta wonder why. Doesn't mean there's not a trade here where you may be able to make a couple points of profit, but there's a pretty significant resistance in its chart around 51, 52. So I really wouldn't see it getting much higher than that.
Okay, is Whole Foods in the same category? Because that's acting terrible as well.
Yeah, two very weak charts. I think Whole Foods is even they're both two stocks that are under distribution here. So I've been pretty bearish on Whole Foods for a while, and the two things these stocks have in common is that they've been big market winners. So the stocks have had their day in the sun, so to speak, and it looks to me like fund managers are just kind of moving out of these two names and repositioning themselves for 2013. So I think Whole Foods technical picture is just as weak as Under Armour's.
Yeah, 'cause I remember when Whole Foods was $9 a share.
Yeah, it's been a monster performer. You look at a weekly and a monthly chart for Whole Foods, and you see just a monster move for the stock. And to me, it looks vulnerable, and I wouldn't be surprised to see more downside here.
How is your knee? Have you recuperated?
Oh yeah, geez, I'm a physical wreck. Yeah, I'm all good with that, and just recovering from the flu, so feeling pretty good. Just ready to start this new year off right.
Well, good. Happy, healthy, Ken. Thanks for taking my call.
Okay, Brian, appreciate it. Thank you.
Appreciate it, man. Thank you.
All right, take care. Yeah, Under Armour and Whole Foods, two very weak growth stocks out there. But again, you're talking stocks that just have made monster moves since the start of the bull market in March 2009. So just a classic example how money rotating out of some of the big winners and moving into other names, and maybe it's going to be Facebook that's going to be the winner in 2013. Still too early to say, but stock definitely showing signs of life. Coming up after the close today, earnings from PriceSmart, PSMT, and no earnings on Thursday to speak of, but Wells Fargo on Friday. Coming up next, the Tom O'Brien Show. I'll be back here tomorrow, folks, 3 o'clock Eastern for another edition of Breakout Investing. Have a great day. We'll see you tomorrow.